Alright guys, welcome back to another video on the NZ Day Trading 101 channel. I'm Shami, and today I'm just going to talk to you a little bit about a question I get asked a lot is, how do I start trading? What do I need? Can you give me all the platforms? What do you use? So today I'm just going to talk to you a little bit about like what I would personally do if I was a new trader and was just getting into trading. So there's not much out there in New Zealand that teaches you how to day trade these New Zealand stocks. So I can help guide you guys like how I started and all the platforms that I kind of use from my experience. So for starters, so basically if I was a new trader, what I'd do is I'd probably open up a Sharesies account. So I'd probably start off with $1,000. $1,000 is probably a good amount to kind of get in and out of trades with. I think that's perfect for starting, and if you're not kind of comfortable yet of using $1,000, then probably just open a virtual trading account with the NZX. So the link's in the description below if you want to open like a virtual account. Yeah, so first of all, what I'll do is I'll open a Sharesies account. So I'll just open it up here as well. So let's get another tab over here. So Sharesies. So for those that don't know what Sharesies is, it's just like an online broker. So there's pretty much 3 online brokers in New Zealand that you can kind of trade stocks with. So one is Direct Broking, the other one is Sharesies, and the other one is ASB Securities. So Direct Broking and ASB Securities are kind of similar, but so the only difference between them is just user interface and the fees that are associated. So Sharesies probably has the best fees, especially for new traders. So let's go to Sharesies. So this is Sharesies basically. So what I'll do here is I'll probably just sign up to a Sharesies account, and if you guys wanted to get a free $5, then just go on the link in my description below, and you'll see a link down there just to say like, oh, it'll just give you free $5. Give me $5 too, but yeah, it's all good. Yeah, so what I'll do is probably first of all I'll probably stick $1,000 in this account. And now we're like, sweet, now I got my capital. So your capital is your $1,000. So don't think about it as you're going to lose. Oh, if I stick all my money, I stick $1,000 into shares, I'm going to lose all of it. It's not like that. So as long as you're investing trading in the correct way, then you won't lose money. You actually, if you do lose, you'll probably lose just a fraction of your $1,000 or like $50, $100. This depends on how well that you manage your risk. So with managing risk, you need to find profitable trades, and you need to also, if the trades don't go in your favor, you need to cut your losses quick, sell out. You also need to be patient, so you can't just keep jumping into every stock in and out. You need to know which stocks to trade, so that's really important. Yeah. So yeah, first of all, I'll probably open up a $1,000 Sharesies account. All right, sweet. Now I've got my capital. So your capital is like your weapon. You're just going to trade with your $1,000, and you're going to make money off that, and that's how it should work. So then what I'd probably do is open up a Direct Broking account. So with a Direct Broking account, it's free. So as you can see, applying for a personal account is quick, easy, and secure, and join with the Direct Broking app. So if you join that way, then what happens is it's completely free to join. You don't have to stick money into it, but correct me if I'm wrong. But yeah, so what I'll do is I'll probably open up a Direct Broking account, and then I'll probably just use the market depth. So if you log in, then you'll see what the market depth is like. Let's see. So this here. So this will show you, this little graph is quite good too, but this will show you the depth. So obviously you need an account for that, and that basically just shows you like how many bids in the market and how many asks in the market. So buyers versus sellers. So it's a good way to kind of know like is the market more in the favor, or the stock more in the favor of the buyers, or more in the favor of the sellers. So after I open up a Direct Broking account and see market depth, the next thing I'll probably do is just on your phones or your computers or something, just keep the NZX site available, because this is where you're going to find which stocks are moving in the market. So here, so I'd probably look for announcements, so NZX announcements, so stuff that like earnings. So let's see. So these P ones, you want to look for these P sort of announcements. So these P ones are materials, as it says, material or prescribed announcements. So something that will actually move the stock higher, something that people want to buy, something that's you guys got to take into account that stocks are not actually valued on how they're performing currently. Stocks price in the future value of the stock. So if something's going to, let's say they announce their earnings there and they're projected like 20 to 30% growth next year, then it usually tends to move stocks higher because they're trying to, institutions and stuff, they're trying to value in like the future earnings of the company. So there we go. Cool. So you got your shares account for your capital. So for your starters, the $1,000 shares account. You got your direct broking for your market depth to view your buyers and sellers. Then you got your NZX to view your stocks that you're going to look to trade. So I have talked in my previous video as well about upcoming announcements. So these are kind of stocks that are having the announcements coming up soon. So these are quite good too, because with these announcements, there's two ways you can play it. You can play it on the run up to the announcement. So basically a stock kind of let's say the announcements over here, so the earnings announcements over here, the stock will sometimes tend to run up to the announcement. And then when it gets to here, then two things can either happen. You can have a really shit announcement, and the stock will go down, or the stock will go up. So personally, I'm quite a risk. I like to be a safe trader, so I don't want to get into the whole gambling, because you never know what's going to happen with earnings. Earnings could go up, but earnings could also go down as well. It depends how the market takes their earnings announcement. And the only way you can actually see how the market takes that earning announcement is if you wait till the earnings come and the market either dips or it goes up. So if it dips, then obviously leave it alone. If it goes up, then you can kind of trade it on the way higher and then kind of take your profit there. But you can also play this sort of the run up to earnings and post earnings as well. So I would probably get out on the earnings day. I know it's kind of tempting, you're just if the stock goes up and it's damn it, I missed out on that, that earnings announcement. I could have made freaking 20% off their earnings and stuff, but you never know. Majority of the time, this might work. But I'm not saying for you guys not to do this. If it's part of your strategy and something that works for you, then definitely do it. Obviously, I don't do it, doesn't mean that you guys don't have to do it. So completely up to you. If you're seeing there's a high probability that this company is going to have a good earnings announcement, and like I said, it's up to you, whatever your guys' strategy is, but it's not part of my personal strategy. Cool. Alrighty. So yeah, so you got your Sharesies account, you got your Sharesies account, you got your direct broking account, you got the NZX, and none of these. So Sharesies, you had to put in $1,000, so they'll cost you money. So sweet, that's $1,000. Direct broking is free, NZX free, and the next thing that I'll probably look into is TradingView. So TradingView is a great way to kind of see what's happening with different stocks. So you want to actually look on the charts as well. So there's different ways. There's completely different ways you can trade. There's swing trading, there's day trading, and there's all sorts of different ways. And it's up to you guys to find what works for you, what works for you most of the time. And you also got to see what happens if how can I preserve my capital. And for you guys as well, if you guys take a loss, do not give up. Honestly, you can make money off trading like this. I've been doing it for a while now, and I'm living proof that you can actually make money off the New Zealand market. Anyone can do this. You don't need a degree. You don't need you don't need all this, be brainy as or anything like that. I'm fucking, I'm dumb as. I don't even know. I just, shove some money in the market and kind of be oh shoot, okay. So this happens like this happens like that. And kind of writing things down, oh, okay, sweet, I've kind of figured it out. I'm still learning till this day. So there's millions of videos online. So it's up to you guys, for you guys out there that are really passionate, that you really want to be a day trader, how bad do you want it? What are you willing to sacrifice? I mean, for me, something I had to sacrifice was a lot of things. I got off Facebook, I was always scrolling on my phone and stuff, and I found out that's the biggest waste of time. So don't even bother having a Facebook. Netflix, waste of time. Xbox and all that, waste of time. For me, I like to look at charts. I like to look at YouTube videos and what other traders are doing, and just constantly learning. Because at the end of the day, this type of stuff. This is a valuable skill to have. So if you can know how to trade properly, this is a great way to earn side income. You can grow your wealth account while you're doing a job as well, or while you own a business. Yeah. So anyways, back into it. So with the charting, so you got Sharesies, direct broking, NZX, and now TradingView. So TradingView costs about like $25 a month or something. So that's excluding the live data. So yeah, here we go. So let's say you want to look up stocks like Serco. So this is something that I use. I feel like charting is really important because you get to see how the price is behaving. So if you don't know what the price is doing, then it's kind of hard to judge. I don't know how people trade by saying, oh, the price is like $2.50 last week, it's $3 this week, let's buy it. And they get into it, it goes to $3.20, they're like, yeah, it's going up. All of a sudden it drops back to $2.50, like, oh, what happened? Then they sell out for a loss, they lose money, and they're like, oh, trading's just gambling. Trading, all you do is just lose money. Nah, it's nothing like that. I'm telling you guys right now, it is possible to make money in trading. You just got to keep going. You go through the struggles, just like anything in life. If you want to do something and put full hard work into it, you're going to have those obstacles in the way. I had those obstacles. I've been doing this for a while now. I've been involved in markets for over 6 years. So 6 years when I first did my first trade. So till now, I've had a long kind of journey along the way. Lots of losses, lots of gains, just all over the place. And eventually, you go through these wild swings. So, what happens is, when you first start trading, you have a few losses here, little ones, you'll probably start gaining. All of a sudden, right now when the market is, it's quite good because, we've just had a huge dip during the coronavirus thing. And now the market is starting to go up again. So basically anyone could make money in a market like this. But what about in a down market? What about in a sideways market? Because there's 3 different phases of the market. There's the uptrending phase of the market, then there's a consolidation phase, and there's the the rundown, sorry. So you got to know how to trade all these different phases. So in order to do that, you need to know about risk management. And the most important thing is preserving your capital. You want to make sure that you can't let one loss wipe out, 10 wins, So you got to make sure that your wins are bigger than your losses. So you got to make sure, let's say you're making $200 off on your wins, and you're only losing about $20-30 if you've got a $1,000 account. So yeah. So anyways, so look, going back to this, actually I'm not even going to cut this part out, but I forgot what I was going to say. But anyways, going back, so I need to have these charts. So with these charts, you're able to figure out what trades are working. For me, after a while, if you guys learn about a little bit, there is a little bit of technical analysis involved. You don't do all the fancy the bear flags and all that type of stuff. I have some few favorite patterns, and it just, for me, those are my patterns, something that works for me. If you guys find a pattern that you see regularly in the market, because with charts you're able to see you're seeing a high probability chart pattern. So for me, if I saw Serco, I saw one here. So I saw the flat top breakout. So that's one of my favorite. There we go. So this for me is a flat top breakout. So it couldn't break 290. It broke 290. So it had 1, 2. Starting to consolidate at the end now. It's starting to squeeze up. So the price starting to squeeze up. Also the 9 EMA is starting to kill here. And I knew that the price was going to break from here and go higher. Unfortunately, I didn't do these trades because my dad did these trades. I told my dad, this is looking like a flat top breakout. You should get into that. Cut your losses if it goes to about if it goes under 9 EMA, 285 or something like that. And then he made good money off it. So if you got into this range here, you would have made about anywhere from 15, 16%. So this is a really good pattern. I love this pattern because it works for me. So yeah, so another one was so I obviously make mistakes too. Like I'm quite guilty of taking my gains quite early because I'm used to that. I actually like to take my gains early because it's better to take a gain than to take a loss. So sometimes you can't leave it too late. So Sky City was something I'm quite guilty of. I was actually eyeing this one up too. I was like, yeah, this is going for a flat top breakout. This is definitely going to break out. It's definitely going to break out. And I got a little bit guilty here because if you guys are on my Instagram account, you'll probably see that, my profits and stuff. You'll probably see that I made a small gain, like I can't remember, like 400, 500 bucks, something like that. Yeah, so this was going for the flat top breakout here. And I was actually lining it up. I was like, yep, it's going to squeeze higher soon. And I got in about 252, something like that. And then I got out about 259. So I only made about 252. I only made like 3% or something. But and the next day, what happened? It went up here. It went up by 9%. So I missed down like probably 600 bucks, 700 bucks, something like extra. So at the end of the day, I can't let these things like this is what you call FOMO, fear of missing out. So fear of missing out, FOMO is a bad thing in trading. You cannot have that. If you miss a gain, you got to be happy that that you got something from the market. At the end of the day, you didn't take a loss. Yes, I could have made 700, 800, 900 bucks more, but it's okay. I'll take a learning lesson from that. So for me, a learning lesson from that particular trade was that I'd probably, if I was in here, I'd probably hold till it goes back down to my sort of So basically, for a learning lesson for me was if I got in here and the price was continuing to trend higher, and as you saw on the 2nd of June. Let's see if we can go back to the 15-minute chart on the 2nd of June. Yeah, 2nd of June, so 10 a.m. the market opens down there. Then it finished at about 5. Yeah, so I finished a little bit higher, so 2nd of June, so it went from 248 and finished at about 260 or something like that. I mean, I could have held that, but at the same time, it was a bit hard because I thought I didn't. Sometimes you just don't know. Sometimes the next day, as you saw, Sky City just gapped up. So a gap up just means that the next, it's closed at 260, and the next day it opens that at like 265. So it's had a mini gap there, and yeah. So sometimes you can't predict that. Sometimes you just got to hold it in this range here. So I'm looking at a 15-minute chart, by the way. Go back to the charts. So basically, so as I was saying before, it's just basically, so another thing is that you want to let your runners run, but sometimes you have to take your losses, if you have to take your gains, you just take your gains, like for me, I just take my gains where I can because you never know when a stock can just start to trend the other way. So, so what I did here was a bullish sort of, there's lots of volume coming in here, but you also had this long, red bars here as well. So, but what I was actually trying to do is get out at 259 and get back in at 247, then kind of sell it again at 260, then get back in at 247. So you can actually trade these ranges. So as you see, this is a range right here, this range. So the range is about 8%. So if you could probably buy here, sell here, buy here, sell there, buy here, sell there, buy here, sell there. And you can make a ton of money by just going in and out in a range. And especially if the range is bullish as well. Like obviously this is going for a flat top breakout. So I know for me this is a safe trade because I can see that it's going to break out one day, which it did. But I was trying to play that range. So I was doing the same thing here. So basically I got out at 259. But looking to get back in at about 245 or something like that. So unfortunately it broke out, but that's okay because that's fine. Another thing is this is the long-term daily chart. So what happens is you got to line up your trades on a daily chart. So if you're looking at a swing trade, then the daily chart is perfect. But in order to find stocks to day trade, you want to day trade stocks that are looking good on the daily chart. So from here, the stock has just broken out. So if it broke out, then you could have day traded this on the way higher. Unfortunately for me, for the last 10 days, I haven't been in front of the computer much. I've just kind of, quickly looked at stocks on my phone, just traded it, and it's up now, and just sold it kind of thing, because I have a business as well. So I've been fully involved in my business, trying to, get it back and, get it back up to scratch kind of thing. So, so the business that I own is it's completely non-trading related, but in the future I'll probably look to get into like full-time trading fully. So that's all good. Cool. So there you go. So you have your Sharesies, your direct broking, your NZX site, and your trading view. And these are basically all the tools you need to kind of get started with trading in the New Zealand market. And in order to learn these tools, there's heaps of stuff online about them. Also ask questions in the comment section. I'll try my best to get them answered. So sorry for the late videos. I haven't been posting much, but it's because I've just been super busy. I'm talking like 8 to 6 kind of thing every day for like 12 days straight. So you probably know how that is. So that's all good. Anyways, thank you for watching my video. Always appreciate the support, and thanks for subscribing. And please like the video below. It really helps and really appreciate it. I'll try bring out as much videos as I can about this sort of stuff. And I'll see you guys for the next video.